Most of my clients come with bookkeeping that was prepared by maybe somebody who wasn't an expert in real estate. So there's a few things like I can tell right away based on how things were booked if they understood the real estate investing space or not. So kind of first one is an earnest money deposit and how that's booked. So when you purchase a property, you give, a small amount of money up front, like within like the first 3 days of your submitting the offer, so that you kind of prove like you're serious about this transaction. So they hold that money in escrow. And that will be booked on the balance sheet in an earnest money deposit escrow. It's usually other assets, the point where you pay that amount. And then when you actually close on that purchase of that property on your closing statement, that earnest money deposit will be credited. So then you're basically clearing that earnest money deposit account and booking the rest of the purchase statement. So a lot of people won't book that correctly, but then that gets me to the next thing, which is booking closing statements. Real estate investors are always doing purchases, sales, refinances, and with those, there's long closing statements that go with each transaction. And a common mistake I see other bookkeepers making is they'll just take the last line, the piece that's, cash paid at the closing table, and they'll be booking that to just your fixed asset balance, and that's not accurate. Every line on that closing statement you need to look at, and because potentially there's a different treatment for each of them. So you, especially like for your fixed asset balance, that's going to be equivalent to your purchase price broken out between building and land. So that's another key area that you can kind of ask, how do you book a closing statement? And that should be a pretty big tell of if they understand real estate or not.